The S&P 500 officially closed in correction territory, down 10% from its recent closing high on February 19th. How much more room could the market go? I think it's possible that the market could dip another 5%, perhaps even another 10% from here due to all the uncertainty from the back and forth with the tariff negotiations and trade war. We're seeing retaliation from other countries. Look, I said there was a possibility the other day that the market could have bottomed, and I was wrong. That was a possibility, but it looks like I was wrong. We had better than expected CPI inflation data and PPI inflation data, and the market still sold off due to a lot of the uncertainty with the tariff policies and the possibility of government shutdown. Right now, it looks like the government shutdown will probably be averted. Chuck Schumer said Senate Democrats, will likely vote to keep the government open. So that fear is kind of taken away. But who knows how much more the market could go? I still think that the sell-off is closer to the end than the beginning. Obviously, time will tell. But at times like this, when there is a 10% correction, look, we've had this 48 times since 1950. And yes, this is a pretty fast 10% correction, the fastest since 2020. But usually it's a good buying opportunity a year out. So I think we're closer to the end than the beginning. And obviously, you don't lose money until you actually hit the sell button. If you're holding your investments through this volatility, I think that's the best strategy because it's hard to time the market. You don't know when to get back in. And if you if you missed just a few of the best trading days, that really could jeopardize your returns for the rest of the year. And those best trading days in the market are often right after some of the worst trading days. So it's important to stay invested through that volatility because even pros can't time the market. I deployed maybe about 5% of my cash into the market the last couple days. And look, if the market drops another 5%, I might add a little bit more. Time will tell. But it's definitely not an opportunity to sell. You should either hold your investments or deploy new money into the market. And I also wanted to say that I am lowering my S&P 500 price target for the end of this year. Initially, I said by the end of 2025, my base case was 6,600 and my bull case was 7,000. I'm going to dial that down. I'm going to say 6,400. I'm sorry, 63 to 6,400 for my base case. And for my bull case, 6,700. There's a lot of strong fundamentals and earnings growth for companies, but due to all this uncertainty, and I expected the tariff negotiations to be more negotiating tactic, but it looks like the reality of it becoming more of a trade war with retaliation. We saw $200 billion in a 200% increase in tariffs for European wine and liquor today. And this back and forth and retaliation trade war is going to add to some uncertainty this year, which is why I'm going to dial down my S&P 500 price target, my base case 63 to 6,400. Still showing a little bit of an increase from last year, but a lower single digit increase due to all this volatility. But either way, as I said, I think I think that the bottom is closer than not. We might not be there yet, but I think we're closer to the end of this sell-off than the beginning. Obviously, time will tell.